does there come a point, even in the life of a good compounder, where the valuations are becoming optimistic enough and the future rates of returns that you can see are low, where one should maybe rotate or move from one position to another? How do you think about selling, in other words?
Well, one side of that, I think the most difficult thing to do in our business is to not sell if you're a long-term investor. And that is, the ones that are really great have been hard for me to identify. It's taken me a long time to understand how good the ones are that are really good. And with almost everybody has less time in the market than I do. But for those who have fewer years experience, if you get a disappointing quarter or you get something like that, temptation is often to sell. And if you've got a really great one, that's probably a bad decision. It doesn't mean you can't lighten up a little bit and try to time it and buy some more. We don't do that very well, so we try not to fool around with it. In the case of Markel, like NSTAR, they'd had a record of 20 years of compounding book value per share. In 2006, it was like 20% a year. Mm-hmm. And so like NSTAR, which was 3 times book when I bought it, Markel got to the point where it was 2.5 times book or something like that. And the fact that I've only doubled my money in 10 years, a 7% return, is a result of that, by paying a valuation which in hindsight was too high because the rate at which they could compound book was less than I had imagined it might be. Part of that backdrop is this whole issue of this 36-year secular decline in rates. All businesses have done less well over the last 5 or 10 years because of the decline in rates, and Markel is an example. And they've now, in my mind, fully adopted the Berkshire model of creating a business inside the holding company that is completely away from insurance. They call it Markel Ventures. Got $1.2 billion in revenue, as you said, about $130 million in EBITDA. So it's roughly a 10 times EBITDA margin. And that will give them the flexibility of being able to put capital to work other than simply in a passive portfolio or other in an insurance business when rates aren't attractive to them. And they're one of the very small number of insurance companies that have the discipline of only putting money to work when their expected return is positive combined ratio. So
you did mention Visa and MasterCard, and I think you own both. You also mentioned Moody's, and it's a duopoly with S&P.
Right.
I was wondering, what are your thoughts on S&P as a business? Is it, it has the same market shares even outside the U.S. They have the similar structures, but curious to hear.
So in the last few weeks, Moody's announced that they had come to an agreement with, I don't know, a government agency, the DOJ or somebody, in terms of paying a fine relating to their activity around the crisis. The amount of the fine was substantially lower than the Wall Street expected, and S&P paid a much larger fine more than a year ago because the SEC had the goods on them. They had a string of emails about people inside talking about how this stuff was crazy, and they didn't exist at Moody's. That is, if they existed, the government never found them. And so there is a modest difference in when the
so this is a cultural difference.
Cultural difference. And so when John Neff, my partner, joined the firm in November of 2009, one of the names that he suggested that we invest in was Moody's. And I said, we'll never buy that. I mean, their behavior during the financial crisis was atrocious. He was a very patient guy. and he said, I think you should meet Ray, the CEO, and the other people and so on. And over the next couple of years, I had the chance to go and meet the executives 2 or 3 times. And I made my own judgment about it. So it wasn't until 2012 that we actually bought Moody's shares. But again, it was not much different price-wise than it had been in 2009 or 10. And so that was an example. And what I've concluded then, still believe, was their behavior during that crisis was stupid, but it wasn't wrong, and it wasn't illegal, And that sort of stuff, as the emails showed, was the problem at S&P, where people thought what they were doing was just foolish. There was no such evidence of that at Moody's. And so I think there's a cultural difference of some. So we haven't gone over there at S&P. We did it in Visa because we have concentration limits in the mutual fund. We did it with SBA in the tower space because we have concentration limits. But we haven't done it with S&P and Moody's.